very much. Good afternoon. Good to be with you. And my name is Mark Saxon. I'm representing Medallion Resources. We're listed on the Toronto Stock Exchange, and we're focused on the production of rare earth metals from mineral sands.
Hello, Mark. How are you?
Matt, good morning. Great to see you.
Yes, it's been a while. I think we met about 4 or 5 years ago. I'm trying to put a name to a face. Apart from that, we've not spoken since, so I thought we'd better have a little catch up and sort of see what you are up to. So Medallion Resources, going into the rare earth space, rare earths outside of China, tricky.
For sure, it's a very complex market, and I guess that's what makes it interesting for lots of investors. And I guess my motherhood statement would be that rare earths are not for all investors. Very complex market, relatively small versus say copper or gold, and in fact, I think in the last 12 months, the rare earth market in total was say $5 billion. So let's say that's about 5 or 10% of what the copper market is, for example. So a relatively small, a relatively volatile market, and it's very important to have a very clear business model about how to actually execute in that market. And again, I suppose we always have the hand of China within that market and open to influence, and so we need to be cautious of that. But I think what we're doing in Medallion is we've created a business model that can really work in whatever part of the cycle we're in rare earths, and I think that's the exciting thing we're doing.
Okay, so let's talk about that, because I'm always keen to understand a company's business plan or business model, and in this case, it is rare earths has always been known as something that China's got the expertise to manage, and anyone who attempts to move into the space is going to need the hand of China to assist them at some part of that process. But that also means controlling margins for companies. So that's the inherent problem. So what are you going to do that's so different?
Absolutely, that's a great question. And really, I suppose most of the companies that you talk to, and I've certainly watched back a lot of your interviews there, and you're almost always talking to companies that own a single mining project, that are they've found something, they're pushing it ahead, they're trying to get it that little bit closer to development or take over and move the project forward. Medallion is really quite different to that. So Medallion is a rare earth technology company. So let's, I guess, look back sort of 5 or 10 years, and we can build up that story a little, and we can think about what happened in that last rare earth boom, which was 2010, 2011, and I was a CEO of a different company at that stage, which did extremely well. And that was about, I guess, the first time that rare earths came onto the map, I suppose, about 10 years ago. The bubble came and went. Almost no projects were developed. The capex was too high. The projects were too remote. The chemistry was too difficult. Really, nobody moved forward, and companies blew up completely. And really, the only survivor, I guess, at that time is Lynas Corp, that did really well. So Medallion, and under the leadership of the previous CEO, Don Lay, who sadly passed away recently, he, I guess, set the guide for the company as it went forward. And Don wasn't a geologist. Don was more of an industrial background. And I guess Don's view was, how do we copy what the Chinese are doing? And how do we make use of a byproduct material that we don't need to go and mine? How do we make use of mineral sand monazite and add value to that outside of China? Because that's what the Chinese are doing, adding value to that material. So Don went about sort of establishing the team and the process to be able to use mineral sand monazite as a feedstock for a process that is executable within the Western world. So mineral sand monazite, very widely traded commodity. It comes from mineral sand mines that were built for the production of either zirconium as zircon or as titanium. So really they were built, we think about Western Australia, we think about Victoria, where I live, we think about parts of Africa, Rio Tinto mining in Richards Bay, for example. Those mines were built to produce zirconium and titanium minerals. They weren't built for monazite. But monazite is a heavy mineral, and so there's always a little bit in those mineral sands that either gets sold to a Chinese market or gets dug back into the pit when they close it. So our business model has been to take that byproduct, find a way to process it and maximize the value and get that into the Western market. And that's relatively low capex, that's relatively low technology hurdles. And really it's copying something that others have done, but in a much better fashion and in a more environmentally friendly fashion as well.
Okay, so let's start. There's quite a few things there. So let's start with the technology first of all. So you're just copying what other other people have already done. So is there any proprietary or intellectual property associated with the technology side of your business?
So we have two sides to the business. So one is the monazite processing side. And we're sort of terming that the Medallion Monazite Process. So we don't have patents in that one, but we do have proprietary knowledge. And so we've spent quite a lot of money on developing a process that is really, I guess, let's call it a scalable off-the-shelf process that is zero liquid waste and produces essentially for the material that goes in, about 90% comes out as saleable products, which is really quite remarkable. So that's a phosphate product, that's a rare earth product, that's a cerium product. All of those have attractive markets. So it's a closed circuit, zero liquid waste system, and that's about as good as it gets with this process. And so we're very pleased with how that's gone. Proprietary internal knowledge. We haven't created patents around that one. We've added on to the back end of that. So rather than selling a mixed product where the rare earths are all in one product, we have now paired our research and licensed a technology called ligand-assisted displacement chromatography, LAD chromatography. So this is a technique that's based out of Purdue University, and Purdue are a global leader in chromatography. So we're able to pair the two processes together. We're able to keep our rare earths in solution. It comes out of the extraction phase into the separation phase, and then separates out into all the different metals that we need to be selling, and which is particularly magnet metals is really where the market is.
Okay.
And so there's patents and protection on that one.
Okay, so I just want to understand what the future value is. So in terms of the what you're calling the Medallion Monazite process, there's no patents to that, so there's no value per se in that. It's the contracts that you get utilizing that technology. And then with the Purdue University technology, you've got some sort of agreement with them. Is it some sort of financial agreement with them, or what's that look like?
Yeah, absolutely. So the Medallion Monazite process. So we have all the research knowledge, and really what we're seeing in the market, nobody's going to catch up with us, and so we're now in the process with that technology of licensing and sharing it with partners. We're also looking at the opportunity to build out, I guess, a process hub. So where we sit within a attractive location for mineral sand monazite, and we're able to aggregate that mineral sand, and we go from, say, a product that comes in at $2,000 a ton into products that can go out the door at $80,000 a ton. So we're doing that value add step. But you're quite right. We don't have the patents on that, and we don't need to really. We're not concerned about that at all. And patents are a double-edged sword, and most patents that are developed are never used. And when you develop a patent, you need to disclose all of your operating technology, and you need to be able to protect it and be prepared to go and sort of fight those battles. We decided to keep it internal and not share that. If we look at Purdue is a major university. Their entire business model is about sort of creating technologies. They have a very deep division that protects their patents and a licensing group. So we have licensed the technology from Purdue University. We have a unique license to apply that to any hard rock rare earth source in the world. So it doesn't just apply to monazite; it applies equally to every other project around the world. And so we're now talking to a whole lot of partners about testing their materials. And really the beauty of chromatography, so at the moment the embedded technology for rare earth separation is solvent extraction. The beauty for chromatography is that you're able to pull from solution just the metals you want, and you don't need to be doing the whole separation of materials. Chromatography doesn't need solvents, so it's not like kind of the old solvent extraction process, which was a whole football pitch of tanks and pipes and kerosene. This is a relatively small footprint process, and I'm sure, in fact, the COVID vaccine that you probably got in the UK was probably purified with a chromatography process. So it's a very widely used process and very well understood. So that's patented, and we have an exclusive license to that, and we're doing the final stages of development now.
Okay, so you used the word unique earlier. So you mean exclusive for hard rock? You have that license globally?
Correct. Yes. Yeah.
Right. Okay.
So the license was shared. So there's two sides to the license. One part went to a recycling company that's doing recycling technologies. the other side of the license went to Medallion, and so we have it essentially for the rest of the world, for everything else.
Got it. Okay. So, and what's it look like financially? What does that mean? Once you start monetizing at your end, he gets what?
So we're funding ongoing research, and so that's fairly modest at the moment. Quite soon we'll be moving into a pilot plant stage, and that's where we have some more costs, but the costs are really quite modest. When we go through into an operational stage, then there's licensing revenues in the term of royalties that go back to Purdue University. But a very, very fair deal. And so we're talking about sort of low percentages, very industry standard kind of deals.
Low single digits.
Very low single digits, yeah.
Right, okay.
And again, it scales based on the process, and there's a few modifying factors to it, but very low single digits. Yeah.
Right, so far, lab conditions, it works. You mentioned pilot plant there. In fact, let's get in there. So I want to understand where the money comes from, because we'll park up the technology bit for a second. So let's talk about contracts like you signed a letter of intent with is it ACDC? Is that the Aussie company, right? One, great name company. Two, what exactly are the terms of that deal in terms of access to monazite sands?
Sure. So mineral sand monazite, I guess we can look at probably 20 different mine sites around the world where mineral sand monazite is being produced. So if we look at, I guess the world leaders, Australia, parts of Africa, Brazil, Indonesia, all of them are handling mineral sand monazite. So it's really quite widespread. At the moment, it's quite a competitive market. All of that material is being bought and going into Chinese customers. And I think that's probably reflective of what's happening in the EV market, the wind market, that's really soaking up a lot of rare earths. So I guess we have finished most of our research that we're happy to do, I guess, in terms of our monazite processing. So the next thing is about looking back upstream. Who's our partners and where can we get monazite from? So we've spoken to almost everyone, I guess, in the market, and so we're now looking at ways to license that technology with those partners and form partnerships. So ACDC is the holder of a very large mineral sand resource in Victoria, and so that's let's call it 500 million tonnes or something like that. So very big numbers. So monazite is well known from that deposit, and so they're moving down a pathway of an IPO and drilling out the deposit, finding ways to extract value from the zirconium and from the titanium, and also the monazite, and that's a real sweetener for it. So I guess the business plan that we envisage together, and Medallion, a shareholder in ACDC, is to build a facility in Australia that can take mineral sand monazite from a whole range of suppliers, not just from ACDC. I think that's really the exciting part.
Okay, so you're not a miner, you haven't got that risk, but you will sign some sort of contract with them eventually, I guess, to deliver to your pilot plant and processing plant eventually, hopefully, a certain amount of monazite, assuming. So it's what happens on pricing, because you're right, everything goes up to China, and China can outbid everyone. And because we're speaking to American companies, and they're just a little bit sensitive about appearing as a competitor to China, because China will use their financial muscle to make life difficult. So how do you do that dance?
And anyone investing in rare earths has to be mindful of the Chinese influence, and we all acknowledge that. And I guess we're all finding niches in the market and not really going head to head with the Chinese market, and because the demand for rare earths is so great that there is tremendous opportunities for many winners. So it doesn't require somebody else's failure for our success, I guess, would be my first point there. In the current monazite market, yes, it's absolutely tight. However, again, the demand for zirconium, titanium products is growing, and so the output of monazite as well is absolutely growing, and so that's the opportunity for us. I guess our part of the supply chain, which is the processing part of the supply chain, we're taking a product that's probably already being sold to a Chinese customer, and we are taking it out of the Chinese market, adding value to it. It may well end up in the Chinese market in the short term because the ex-China market for rare earths is not that great. However, the value will have been added before it goes back into that Chinese market. And then over time, I think we'll see Japanese customers developing, we'll see the US customers developing, absolutely within Europe, there's a lot of momentum in Europe for standalone processing and value add, and particularly if there's border taxes with understanding the carbon that's gone into the production of metals coming into Europe, then I think that's a great opportunity for a company like ours, and where we can compete very well with the Chinese producers.
But how's it work
today and of the future?
How's it work? Okay, so I'm just trying to. You got to manage your money, right? So are you going to just take an offtake and sell the technology to them and process it for them, and then you charge a fee for that? Do you buy the monazite and own the monazite, and then you extract whatever you can extract and process that? Well, hopefully eventually process that. I mean, what exactly is the relationship? How does the money work?
Sure, and I would say very much on that one, horses for courses. Depending on the jurisdiction that we're looking at and working in, depends about the sovereign risk, the access to the raw materials, really is setting our thinking about the business plans that we're trying to execute on. For example, if we look at the Australian market where sovereign risk is very low, then long-term partnerships of working together, us becoming a shareholder in the supply of the mineral sand monazite really works. That's a very sensible model. If we're looking at some other jurisdictions around the world where perhaps a long-term partnership is not as easy to develop, then maybe we'll buy the monazite and we'll bring it outside the country, or we'll sell the technology into that processor for a single-use technology license into that location, and so we can hand it across. We can provide long-term support, but our financial gain is in that first transaction rather than the long-term transaction.
But how does that work?
Yeah, so we're very much horses for courses depending on the location.
Okay. So there's no plan yet. You're agnostic to what that could look like at the moment. But at some point, you've got to pay for the pilot plant and whatever it comes past that. So taking shares in an entity, that doesn't pay the bills, right? So it's kind of a difficult thing. You need money initially. You need to get some money in. You need to show funders that there's a revenue flow. You're not just sitting there building up stock in partner companies.
Sure.
So again, so how are you approaching? How are you thinking about that? Because you've got one LOI at the moment, right?
Correct. Yes, and I guess to put that in context, we've only just completed what we're calling our techno-economic study, and so the techno-economic study covers, I guess, all of the research we've done to date, and for the monazite process. Let's say five years of work have been aggregated into one document, and it's called a techno-economic study. We can call it a pre-feasibility study, but under the rules we work under in Canada, then it's a TA. So the TA is a financial and an engineering model, which I guess defines everything we've done. So we can literally drop that into any location around the world and work out the business model that works most appropriately for that location, and work out the scale of operation that works most efficiently. So we did our TA based on 7,000 tons per year, which is a pretty modest project. So that's about $35 million US capex to build that. Plus some other capital costs around it for the site, but very low cost to be able to get into the business, and that would produce about $100 million worth of revenue per year of rare earths. Obviously, not everything comes to us. We've got to share some of that with the supplier of the mineral sand monazite, but really it depends on the business model of the mineral sand supplier as well. For an awful lot of mineral sand, or prospective mineral sand suppliers, they put zero value on their mineral sand monazite. So we can look at Western Australia. There's a big stockpile there that has never been utilised because the business plan didn't really support utilising and getting value from that monazite. We can look at the US. There was a stockpile within the US until 2018 that was sold to a Chinese customer, and that was probably a liability rather than an asset. So kind of the value comes and goes depending on the market, and there's an absolute pull-through of the NdPr price, which is the magnet metals. As the NdPr price rises, then the value of the monazite rises, and so it's kind of it's hard to know until you know the exact circumstance how the business model looks.
Right. I guess what I'm trying to get at, if I was funding this thing, I'm looking. you don't have any IP on your process. Someone else owns the IP on the back end.
We have lots of IP. There's no question about the IP. So,
okay, no patents.
So the IP
no patents.
is locked and loaded on the monazite process.
You've got a process.
It's just that we don't go to a patent. So the only difference is we don't go to a patent, which means we haven't had to disclose to the entire world the process, which is smart. It's not silly. And so if you've ever been down the process of creating a patent, then everything you've done has to go onto a piece of paper and be lodged. And when you understand the dynamics of the rare earth industry and who our major competitors are, then that would be madness. And so that would be a complete loss of our internal knowledge, because we're a small company. And do we have an ability to defend our IP against a state-owned enterprise in a foreign country? Probably not. So keeping that internal has been the smart way to approach this.
But I like the irony of the fact that you've done that off the back of understanding the Chinese processes. So it's, right. But if it comes to valuing the company, it's going to be on the contracts that you get, right? It's going to be on those events which allow you to create revenue or shared revenue streams, right? So because you may or may not own the monazite sands itself. Sure. Right?
Yeah.
And you'll work that out and you'll let everyone know what that looks like. So you need lots of these things just to fund the pilot plant. You'll need even more than that to demonstrate that. Hopefully the pilot plant demonstrates your technical capabilities, but also your ability to show line of sight to an end product, whatever that may be. It may be a carbonate. I don't know what you're planning to do. How do you go about getting those contracts in place like today, this year? Because there's a few people out there touting various versions of your technology, So how does that work?
Yeah, well, I would say, at the moment in terms of competition, like there's zero. Like there's no one doing what Medallion is doing, and that's for better or worse, I suppose. That you'd like to have a bit of competition is good, but there's really there's no one who's coming along with a transferable technology that Medallion has developed. There's some other ideas, I guess, that are fixed to single locations, where the mineral sand monazite has to be transported to that location, and that's quite different thinking, and that's not easy to do, and so we're able to sort of flip the switch on that one with the way Medallion has approached this, to say we're able to come to you. You're able to add value to that process, and we're going to do that together.
That's interesting. That's interesting. So what you're saying, there are people out there who have single site operations, like in energy fuels we've talked to in the past couple of weeks. But you're saying is because you've kind of got a mobile solution, we can come to your location and process with you or for you, however.
Yeah. So we've done pretty deep dives into with support of our upstream partners, and which is some guys out of Singapore that Wellsback that gives us good support on that one. Has had a pretty deep dive into where the flow of mineral sand monazite around the globe is at the moment, where the real ideas for hubs are, and like at the moment, the US is not a hub. Medallion spent a lot of time looking at a place to operate within Texas. However, the US has almost no mineral sand monazite. So far better to come into Australia, far better to come into Africa, far better to come into Southeast Asia, where there's Australia perhaps has 20 times as much mineral sand monazite as the US does. So there's no reason to carry monazite from Australia to the US and then have the product go back outside to a Chinese customer or to a Japanese customer. And that's always a big issue with rare earths in general, and it's not specific to our company, is that the skew in the market between supply and demand is so Asian centric that it really is a challenging market to play in. So the business model has to be very suited to where the customers actually are and where the deposits are and where the material comes from.
Right. So the technology is transferable, mobile. So but there's still a processing component to this, right? So you've got to extract whatever you're hunting, NdPr and other things from the monazite sands predominantly. you're going to have to build something, physically build something, or your partner's going to have to build something, or between your balance sheet, you have to build something. So what does that look like? Have you got so far as to design what that could look like, and what's the scalability of that?
Yeah, I guess when we look at the capital steps that sit in front of us. So yeah, as you've mentioned, I suppose the first one is the pilot plant. So the pilot plant process and all the surroundings for the pilot plant would be $3-4 million, something of that range. So yeah, nothing extraordinary. And I guess when we think about that, there's two sides to what we're doing, and one's the chemistry, and the other is the engineering that supports the chemistry. The chemistry we understand extremely well. The engineering is the place where we need to focus on. So that's for the monazite process. And again, we can say similar kind of numbers for the chromatography process once we look at rolling that out. So that's our first capital hurdle. The second capital hurdle will be how we build it, where we build it, who we build it in partnership with. And there we're talking, so to use the published numbers, so $35 million for a 7,000 ton per annum plant. So that's, and again, to look at Energy Fuels, that's about 5 times larger or something than what Energy Fuels is doing at the moment. So the opportunity there is to go to the suppliers of monazite, and I think it'll be absolutely in partnership and revenue sharing within the value up step that we get on the mineral sand monazite, because the value add is really quite remarkable to go from something that is $1,500, $2,000 a ton as mineral sand monazite. When you're selling the NdPr from that mineral sand monazite, you're looking at $80,000 a ton. And there's reductions and things along the way. So it's not one for one, but the markup is very substantial. But the business needs to be right-sized, I suppose. So it's going to be right-sized with the monazite supply. It's going to be right-sized with the customer demand. And and that's really the challenge in rare earths, because rare earths behave as industrial minerals. They don't behave as commodities. And so you really need to be relevant with your business plan, relevant with your financing plans, and I know that's your concern, and relevant with your customers to make sure that you hit all those boxes. So for when you look at the economics, and we haven't published the economics fully from our TEA, and again, because it's for confidentiality reasons, because we don't need to be exposing too much then, that anyone that comes inside the tent and takes a look at those and says, all right, that's pretty attractive, then that's where we start to talk about sort of real financing decisions, and that's a pretty low bar when we're talking sort of 30 to 50 million kind of dollar range to build something that's got a pretty good revenue, highly relevant in the market because of how strategic it is, highly relevant because it doesn't need to have a mine built. It can go within existing facilities. The footprint's very small, chemical needs are small, it's got no waste. That's kind of the sweet spot for us.
Okay, so that's great on the thesis, the idea. Let's talk about the money. So in terms of cash, you're 17 million market cap today. What's your cash position today?
So cash today is about 1.6 million, so both in Canadian dollars. So
right,
we've got sort of, I'd say $2 to $3 million in the money warrants.
Right.
So that comes in most months, and so we see the trickle in from that, and that keeps us kind of cash neutral at the moment. So for the stage of the business, we're not in a panic. We're not looking for money at the moment, and so we're able to achieve our milestones. The research we do at Purdue University was all prepaid, so we've got no particular costs on that one, and some support and materials and things, but nothing.
Okay, so no big ticket items. Your G&A is relatively low, so all good on that front. So how do you, or let's start with, when do you think you're going to need to go to market to say, right, we've got enough interest, we've got signed letters of intent, binding or otherwise, whatever that comes back in, we need to raise some money for this pilot plant to be able to prove the concept works. When's that happen?
Sure. That's not something that we're focused on at the moment. I think we're still focused on those partnerships and building out partnerships. And so we're looking at, I guess, at the moment, focused on the different hubs, I guess, around the world, and identifying the potential partners in each of those hubs. Let's say we're 6 to 12 months out from that kind of event.
Okay, but you know where everyone is. It's a question of where are you with those discussions, right? Sure. You've got to get into discussions. You've got to persuade them of your technology and the financial upside for them, and talk about how you construct a deal, because each one sounds like it's going to be slightly different. That's what we're saying, right?
Sure. Yeah, every deal, everyone we speak to is slightly different because they're a different point on the supply chain, and a lot of it is about how robust their own business is. How much they really need to be extracting value from mineral sand monazite. So at the moment, there's miners who extract zero value from it, who are kind of happy with anything. There's other ones who are selling into the Chinese market and getting a premium, and so doing pretty well. So obviously, we've got to have a pretty compelling offering to those kind of guys in the market that to be able to put ourselves in front of it. But yeah, I guess everyone is talking about the same kind of problems and the same issues, and it's a global problem on access to critical materials, and so at the moment, absolutely, China is mining their own materials. China is bringing materials in from Myanmar and from Laos and across borders, and all to be processed, and MP Materials sends their concentrate for processing in China. So everything is kind of bottlenecked through China. It's going to take quite a lot of effort to build a new rare earth mine, and $500 million of financing to build a new rare earth mine sitting outside of China. That's where the real risk is. That's a really huge challenge because of the fragmented nature of the market, and I guess because the total market is pretty modest, $5 billion or something like that. There's no real takeover opportunity at the moment from one of the major companies to come in and say, look, we want to be so much in rare earths, we're going to take over one of those prospective miners. So it's about companies have to do it themselves, and to do it yourself, you've got to be fairly lean and mean with your capital. I think that's the path that Medallion has taken. I guess that said, and I guess we can look from the news of today or yesterday that Rio Tinto committing into the development of Jadar, the lithium project in Serbia. So these markets are now getting big enough to actually attract the attention of major mining companies, and BHP getting involved in the Ring of Fire, and so we're now seeing that big shift in the market, and so there is, at some point, there will be some of those big mines built for rare earths outside of China, but still the hurdle is high, and they're still a while.
Absolutely, and for you to get finance, you're going to need to go from lab conditions to pilot conditions, get that finance, proof of concept, show it can work at scale, right? Yeah. To be able to, then roll this out. So in terms of timing wise, you are in terms of revenue, you're some ways out at the moment, aren't you? There's no real line of sight. We're
some ways out, but that's okay. And that's the nature of the business we're in. And I think we'll see multiple licensing agreements, and that's absolutely the focus for us at the moment. And they're the places where we see independent parties validating the technology and coming back to us and saying, all right, that's where we need to be. So that's the independent validation. And those parties are then very motivated to see moving through the last stage of the pilot plant and moving on to construction of the project, because they're the guys with skin in the game. They own the monazite. They need solutions. They want additional revenue, and they also want to deal with the waste issues that they're facing. So, we're motivated from both sides to meet in the middle.
Okay, Mark. Well, look, I appreciate these sort of, coming on telling this story. I guess the market's going to be looking to you to deliver news about these contracts, these conversations with groups, and some sort of clarity about, timing and funding of those. So appreciate your time today. Thank you.
Thank you very much, mate. Appreciate the time to talk about it. And all I can say is that rare earths is an amazing, interesting field that is growing incredibly fast. And so we're seeing demand growth going through the roof. We're seeing companies like Medallion really finding their places. And so, I think Medallion's going to be a winner, and many others in the rare earth space as well. So, happy to talk anytime. Cheers.